Per usual, living on this channel is for educational purposes only and is not intended as financial advice. I have a few questions in the mailbag, so let's talk about those for Teaching Tech Tuesday. It's been a few months since we've reinvigorated this YouTube channel, got a bunch of new people. So I can't think of a better time to recap some of this stuff. We just went through basically 6 months of bullishness. So if you survived, congratulations. If you didn't lose your shirt, congratulations. I'll bet you that there's a lot of people who didn't make money these past 6 months somehow. And if you are one of those people, definitely assess what you're doing and why you're doing it, because something needs to change clearly. So it's a good time to get your house in order, get your wallets in order, allocations, spring cleaning type stuff. Just make sure your security on your wallets is backed up appropriately, cash and crypto in places you want it to be, stuff like that. So let's start with first question here from The Sharper Sword. Series of questions asking about software resources, TradingView. I'm also getting a lot of questions about leverage trading, which is always interesting what part of the cycle that is. Usually it's the end of the cycle, or, it's when retail comes in and says, hey, I have a view I would like to express. I don't have a lot of money that I can trade with, but if I use this thing called leverage, then I can trade with more money than I have and make more money, right? And that's where people tend to get into trouble because they don't understand the risk management aspect, sizing, leverage, that sort of thing. So I'll discuss that a little bit more later, but The Sharper Sword specifically asking about where can you leverage trade? Kraken is an option, certainly. There's different rules globally, depending if you are non-US or US, so you got to keep that in mind. There are always DEXs as an option. GMX is a great option that I've been utilizing. And we also have a leveraged ETF now. We have a BitX ETF. So that's a 2X Bitcoin ETF. Depending on where you are in the world, if you have access to this stuff, there are lots of different types of options for you on the leverage side. On-chain, centralized exchange, it just depends on what you're comfortable with. I think BitX, if you have access to it, is a great starter tool because you can't get liquidated. It's only 2X. If something goes against you, if you're wrong, or if you're right, you'll feel it, right? Okay, so you get to practice sizing, you get to practice entries, exits, stop losses. So either you start on the lower end with the leverage just to get a flavor for what you're doing, or there is an argument for, you know what, let's crank it. Let's crank it to 10, 20X and touch the stove, figure out what works and what doesn't. You're probably going to get liquidated a few times. Some people like that. Depends on your personality, depends on what you can tolerate, but there is an argument for that as well. The other reason to use BitX over another exchange would be fees, as well as custodial concerns. I don't have any custodial concerns with Kraken personally, never have. But when we're talking some of these other offshore exchanges, yeah, I would never touch them. Just personally wouldn't. So there are risks beyond just getting liquidated for leverage that you need to consider, definitely. And I've done a bunch of different videos now since August last year, June last year. One of them, the first one I did specifically, was talking about what I use on TradingView and what you can do on TradingView. Even on the free version, there's a lot of stuff you can do. And embedded within Kraken Pro is a version of TradingView that has some paid features, but for free. So for me, all I need is the cloud, yearly pivots, Williams fractals, BPVR, volume, RSI. I don't need much personally for me. This is it, right? If I had to limit myself to this forever, I'd be totally fine. Chart patterns are subjective. You can draw those, right? Fibs as well. Fibs are right there. So theoretically, you don't even need a TradingView account because you can access that through something like Kraken Pro. And before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. The other reason to use Kraken Pro is all of the other functionality, looking at the market order book, looking at the market depth, looking at the categorization of the coins or layer ones, layer twos, whatever moving today. You know, I talk about that a lot. So being closer to the tap of the exchange versus using TradingView solely, I think has its benefits, but that's obviously up to the individual. My personal preference has always been Kraken, which is why they're a sponsor on this very channel. So I'll get more to the leverage piece in a second. Here's the other question from SGA. It would be helpful if you discussed trade sizing and leverage. So again, I'm always sort of reticent to talk about this because it is different for each person. But the general rule for me is if I'm using leverage, I want high conviction trades. You know, I don't want to be trading leveraged shorts in a bull market. Okay. I'm not going to be trading leveraged longs in a bear market most of the time. So you definitely have to know, are you trending or not? Are we flat? Probably not a great time. Are we in this slop and chop mess? Probably not a great time for my style of trading, which is more higher time frame, fewer entries, fewer exits. If you're, a scalper or something on lower time frames, you probably love what's going on right now. But again, that comes back to what kind of trader are you? What do you prefer? Are you better trading the long side than the short side? Are you better trading the short side than the long side? Some people just cannot trade on the long side. They just can't do it. It just physically burns their soul to hit that green button. Okay, they'd rather hit the red button. So if you're that person, you're probably not going to have a good time in this current market trading on leverage. The other thing I like to do is eliminate as many variables as possible when you are trading on leverage. So, Steve Jobs gets up every day, or he did, RIP, put on that black turtleneck, right? One less decision to make every day. So I'm using a fixed leverage amount, usually 5x is what I prefer. I like to use fixed unit sizing for entries and adds to position, breakout trading, trend trading. I like to go into a trade saying, I want to size up to X units or X dollar amount or X crypto amount. Here's how I want to get there, right? You have to have a path in mind. I need X amount of ads, or I want to see X amount of ads potentially. Or this is just a breakout trade and it's time to go. And then you never want to trade your entire portfolio on leverage. The allocation stuff is super important because if you're new to this, there's a high percentage chance that you will at some point get liquidated for some reason. Maybe you can't submit an order and you're on a DEX, or maybe the exchange goes down for whatever reason, or maybe you're asleep and don't have a proper stop loss. Stuff happens, and you want to make sure you don't get completely wiped out from something silly. So there's going to be this siren song and want to sort of go all in with your entire stack on one idea, rich or wrecked, right? Liquidation is my stop loss. There are plenty of people like that. They're not here very long. There's a reason some of us are here as long as we are. Now, do the people who take those type of risks outperform us in a bull market? Those who don't? Obviously they do. But I'm here for a long time, right? Okay, so I don't want to explode in one trade. So just keep that in mind, right? And I talk about this in the position sizing and allocation management. I'll put all these in the description of the video, but I would go through this. You want different types of allocations depending on what you're doing for different exchanges in any given time, custodial risks. It's the same song and dance over and over again, but you definitely want to protect yourself from shenanigans. Okay. I also did this video on how to lose money in a bull market. Went over pretty well. I also discussed overtrading, unit sizing, leverage a little bit. In this video, I would also give that a whirl. And really it's about finding the cruise control mode, right? Where you are confident enough to take the trade at X size, and it's not going to take over your life. You can live your life. You can do things. There are a lot of people that it's all consuming, and it just kind of eats them alive, where they can't take the trade, make the trade, analysis paralysis. You don't want to be there. That's not a fun place to be. Okay. But it's very much an individual journey, and there's nothing I can just give somebody to have them read to say this is how it's done. You kind of have to get there on your own. The other thing about alts with leverage, alts in and of themselves are a type of leverage, a type of beta. They are basically leveraged BTC, right? Some alts are 100x leveraged BTC as is. Look at all the stuff that's going on in Solana. And then if you add leverage on top of that, it's just jet fuel on kerosene on a burn pit, right? And some of it just goes out of control and boom, you're gone. See ya, right? Thanks for playing. So you don't want to be in that position where there's a ton of opportunity and you just blow up really for no reason, not taking appropriate risk management. Next question here, Simple Rudy and Demarius Targaryen. both kind of asking the same thing. What are my top reasons for being bearish recently? Was it legacy hitting targets? Was it things looking overextended? And this was really the key to this question. This is what I hope people are doing if you're actually playing the home game. Like, I hope it gets to the point where you don't have to worry about what I'm going to say because you know what I'm going to say. You know, I'm usually pretty clear cut on what I'm looking for and what I want to see. And if you think that's successful, hopefully people incorporate it into their own analysis, right? And DT here asking basically the same thing. He's trying to match sentiment with TA. The big thing last week was, like Simple Rudy said, legacy sort of hitting all of its targets, chips and semis hitting their targets, AI mania coupled with meme coin mania, Solana, you know, there's some sentiment gauges there. The easy money stuff doesn't typically last forever. When we're seeing coins get released at $1 billion in market cap, or some guy randomly raising 10 million and then losing it, you know, that's usually towards the top. You don't see that at the bottom, okay? You don't see that type of craziness when things aren't super frothy. But on the crypto side, the TA is always a massive part of it. You know, I start there. That's why the focus of this whole channel is TA on everything, basically. Chart patterns, oscillators, you know, we had a rising wedge, we had a bear div, okay. None of this in and of itself alone is enough for me to pull the trigger on being bearish or being bullish. It's kind of the culmination of everything, right? We're coming off, again, 6 months of this basically parabolic advance on a lot of charts. We are very far away from moving averages on the high time frames. The daily Kijun, which is my North Star for being overbought, oversold, we are very far away from that, or were on Bitcoin. We're still very far away from the 20-week moving average. And if Bitcoin's not happy, usually the entire ecosystem isn't going to be super happy. On the legacy side, like I said, the chart patterns were getting hit. The cup and handle targets on a lot of these charts were getting hit. Mag 7, NVIDIA specifically was slowing down a lot. SMCI reversing a bunch today. Again, all that stuff, super parabolic. Eventually, it eats itself alive. It just cannot maintain a run like that forever. The other thing in legacy, the laggards are kind of unresponsive. You know, if you look at IWM, which is the Russell 2000, taking out MSTR and taking out SMCI, that index is actually down 2% on the year. So it might look like there's breadth going on in the market, but not really. So if the top 7 names are slowing down or rolling over, everything else broadly is probably flat or not as happy as it was, right? We've also got FOMC, we've got inflation concerns, we've got energy concerns. And this stuff has all been bubbling up for months. It's just finally sort of mattering, right? Along with everything else that's just risk markets, just totally, completely parabolic for a very long time. And if we look at the TA specifically, I talked about this rising wedge. There was a bear div. There's a bear div on the daily. Those RSI bear divs can last for quite some time on the daily. This one just happened to roll over here, and this may keep going, right? Even though I didn't take a short trade, even though I didn't even hedge any coins, which I should have, easily could have. What this did help me do is prevent myself from continuing to go long, right? Because what a lot of people tend to do is they're kind of late in this mini cycle, okay? So we get to, like, I don't know, 60s on Bitcoin, all of a sudden they're like, okay, I know what to do here. This market's going in one direction, and they keep adding all the way up. They add risk, they add leverage. And by the time they realize the market is rolling over against them, they are already deeply underwater, right? And you don't have to take every trade. Doing nothing is appropriate. Going into cash, totally fine when you see stuff like this, which is what I did for a lot of my positioning. Previously to this, chart patterns were bullish. They spoke of bullish continuation. This one, even early on, looked like bullish continuation. It's just when you get a 10-day pattern, usually that's worth paying attention. And yes, anything pointing up is usually reversal. Anything pointing down is also usually reversal, regardless of what this, what people think of wedges. These do typically break, as this one has, okay? The other thing I was saying, at this very moment, at that same time, we were very far away from the Kijun, that red line. I did that Kijun bounce video talking about expectations of markets rolling over. And it's this yin and yang pendulum swing, tide going in and out, where eventually the unrealized profits on the long side are just too much. We are too far away from mean reversion targets, and the market rolls over, right? Yes, we had record inflows last week. You wouldn't be able to tell me that on the chart, looking back in 2 years from now. Hey, when was that week when we had record inflows, right? I don't think you'd point to the week before this one for that information. So TA is still very important, even with ETFs. And then we've got the weekly 20 moving average, which for Bitcoin specifically, for ETH as well, has always been really good at setting you straight. When we're above it, we're bullish. When we're below it, we're bearish. We typically trend above or below the 20 week for an extended period of time. And when we are very far away from the mean, from that 20 week, it's harder to keep going. Yes, we've done it before. We've done it in 2020. We've done it in 2019. But at some point, there's a probabilistic reversal that's just baked in, right? Along with everything else. So it's not any one thing. It's the collective aggregated odds on continuation versus reversal that really helps solidify the likelihood here that things start to slow down. I also talked about previously, a couple months ago, how to prepare for the dip. In a lot of these videos, I'm kind of saying the same thing over again because my own personal system doesn't really change, hasn't really changed in many, many years. But generally, I'm looking for the same things consistently. And that really helps give your point of view meaning to yourself when you're like, okay, you know, we've got this macro stuff. We got the doomers yelling at me. We've got Powell. We've got Biden. He tripped on the podium again, right? Like there's all this stuff going on. But if you don't know how to quantify that for yourself in your own trading ecosystem, then that doesn't really help you because it doesn't give you direction, you know? So you do have to have some conviction on your own system. Last question here from Swervin. Which non-TA based factors seem to influence crypto the most? Liquidity, Bitcoin having correlations to other assets, seasonality, etc. And how do you piece together your mental framework? I know you allude to these things all the time, but I'd be interested to discuss your mental weighting of them all together. So liquidity clearly is a major, major deal. That's why I even started doing Macro Mondays, right? It forces me to ask the question, what's going on with liquidity? Are we tight? Are we loose? What's going on with the Fed, global markets, reverse repo? So in between the cycles, liquidity is king for sure. Bitcoin specifically is very reactionary to liquidity. The one person that spells out liquidity very well is Cross-Border Capital, Michael Howell. He's definitely worth a follow. He does some great charts like this one, highlighting global liquidity conditions relative to some other index from Goldman. He has other measures of liquidity as well, but all of this stuff sort of aligns with, or has aligned with, historically halving. We'll never know what the Bitcoin halving effect would be if we were not aligned with cycles in liquidity, which just happen to be every 4 years. I'm not one of these people that thinks all the halvings forever are priced in or halvings have no effect at all. It is a very strong narrative and tool at any point in the cycle to show people, hey, we are X% inflation. This is what we're going to be every 4 years. This is what we are relative to gold or something else, fiat currency, right? We don't have a Fed. We don't have any central planner. We have math. That's what we have. One of the first things most people learn about Bitcoin is there's only 21 million, the halving schedule. And immediately there's a clear-cut difference between this and fiat currency. So for the people that are here and understand this, yeah, it's priced in. We want as much Bitcoin as possible. Sure. Like the people that aren't here or the people that don't care have no idea what's going on. So for them, it cannot be priced in. They have no idea. And for a lot of us, we don't care about price until much later in 2030, right? 2032. Now, is halving going to have a diminishing effect over time? Probably. It's going to matter for miners, definitely. But this is very important for just the existence of Bitcoin, right? So it's hard to say like, oh, you know, on day 200 in the cycle, does halving matter? Sure. It matters a lot more when we're about to cross that threshold and we get articles and we get people talking about and learning about Bitcoin for the first time. The day-to-day inflation, also very important. And then seasonality, you know, it's odd that seasonality matters as much as it does. I'm one of these data-driven, analytical scientist type people that thinks the moon cycles and seasonality is kind of voodoo. But if it works, it works. And I'm not saying that seasonality is perfect, but it is worth considering. It's not going to stop me from taking a trade. You know, Q1 isn't usually this bullish, but it has been. February, on the other hand, typically very bullish, and it was. The next turbo bullish period would be April and June. Q2 as a quarter, typically more bullish. And then Q4 has always been the moneymaker, which is a few months after halving in this cycle. So I definitely want to be oriented correctly in October and for all of Q4. And I've kind of joked a couple cycles now, wake me up when September ends, because September is usually terrible. September is one of our worst months. Q3 collectively is the worst quarter. So I definitely like to keep that in mind. How does it weight in my trades? I just say, hey, upcoming Q3, probably not so good. Q4 is probably where it's at. In between the cycles, in between seasonality, liquidity is definitely very, very important, especially these days. So it's definitely important to focus on that from month to month as well. So if you have any questions that you'd like me to answer, just let me know in the comments of this video. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.